Good morning. The market price of one Bitcoin is just under $100,000. This is a map of electricity costs to produce one Bitcoin from countries around the world. These electricity prices are based on residential electricity costs, not industrial. Industrial is more expensive power, but you can buy more of it. So Bitcoin mining farms are typically billed at industrial electric rates, which cost more. But here are some takeaways. For any country on this map that's colored blue, the cost of electricity to produce Bitcoins is far below the market value of the Bitcoins. Deep blue is where the profits for Bitcoin mining are potentially very large, on a sliding scale up through orange and purple, where the costs of electricity are very high. And so Bitcoin mining is likely a money loser in those places. In Ireland, the cost to mine one BTC is over $300,000 compared to Iran, where it's $1,324. A Bitcoin miner in Tehran is 240 times more profitable than one in Dublin, and he could mine 42 Bitcoin for the same energy cost. One Bitcoin requires 6.4 million kilowatt hours electricity, and a solar miner using the machine would take almost 12 years. Here are the top 10 places where it makes little economic sense to mine Bitcoin, and here are the top 10 countries where it makes a lot of sense to do so. A quick disclaimer here, which is that Bitcoin occasionally does a halving. A halving will cut in half the number of Bitcoins that can be mined with a given amount of energy. This means that after each halving, each new Bitcoin costs twice as much in energy output. And they do this to place new limits on new Bitcoin supply. To turn electricity into Bitcoin, you need a device like these. These are called mining rigs, and the rig models were ranked here as the best performing and most profitable. Two rigs here are from Bitmain, one from Cane and Avalon, and two models from MicroBT. All of these companies are from China. Bitmain is out of Beijing, MicroBT is from Shenzhen, and Canaan is based here in China. These companies have sales offices across the world, but the machines are built here. These are the most widely used machines, and they're all made in China. China dominates the manufacturing of the machines used in crypto mining, and 98% of the computer chips used in crypto are made in China. The hardware for the global crypto industry is built here in China, in other words. The rigs and the chips are all from here. We have then a map full of blue countries that are natural resources economies. They are energy rich, and mining Bitcoin would be to their economic advantage. They would turn to Chinese industry for this part, not only for the mining rigs, but on the electricity generation and transmission. And Chinese companies have most of the world's market for that equipment now. What is lacking, though, is a marketplace where the Bitcoin can be easily converted into other global currencies and easily used to buy tangible products. That's where Hong Kong comes in. Hong Kong will be a global hub for cryptocurrencies, but not in the way we understand the term to mean. Singapore, for example, wants to be a cryptocurrency hub for family offices and investors and speculators. But China's ambitions for Hong Kong are much bigger than that. Hong Kong will be the trading center for the world that wants to use crypto instead of dollars or other fiat currencies to do real buying and selling of real products. And Hong Kong's financial center will be completely removed from the American and European banking systems.